It's not about picking stocks. It's about picking the right portfolio.
The best question was actually the last question I was hoping for the entire time.
Really?
Yes.
The last question of the day?
The last question.
It took them that long to ask them?
It did.
Really?
How do you tie it into the signal and the rest of the process? Brilliant, great, best question, because that's what the whole point of it is. And the answer is durations. What is your duration, right? You have analysts, which are probably our longest duration. I would say probably a little bit more than trend around your trend duration.
You mean our analysts?
Our analysts, right?
Let's write this down. Let's as you're explaining this, I'm going to try to, and we didn't rehearse this. We don't rehearse anything. But let's, as you're explaining, so the duration we're going to have of analysis, which would include AI, which is going to give you a hint, it's shorter term. All right, so duration. So let's go out to the trend.
Right.
You
have your trend signals.
Yeah, we have our signals that are either positive or negative. We have the Brian McGoughs of the world, our analysts. We have Freebird.
Yep.
Freebird. Well, his name is Friedman, but we'll call him Freebird today. FB. Right?
Yeah, right.
All that analysis, quantitative, quantamental. These are the fundamentals.
You also have your long-only portfolio.
Yes,
that's around your trend duration.
Portfolio solutions. Okay.
Then you have your trade.
Okay, so that's the trend. That's what everybody wants.
That's about 3 months or more.
This is, if you could nail these all the time, you would, right? A trend that you can ride, a trend that you can get out of. Japan, energy, get out. Stay with it. India, gold, uranium. That's all that analysis. It's quantamental. The signal, again, versus all the inputs that you get from, again, a longer term perspective. And this one includes embedded in portfolio solutions is what quad you're going in by country, all right? So let's go to, you want to do what?
Trade.
Trade, okay, trade.
Trade is less than trend, right? So
Yep.
you're about 3 weeks.
Yep. Okay. So that's typical my duration that the daily risk range product that I built, which is not the Hedgeye AI product, but they have similar sets, similar principles, mathematical principles and inputs. That's a key thing that I just said there. Right? So this as we define it on the immediate term trade by KM, the one that you see in the risk range product is 3 weeks or less. Okay? Now let's do the next part.
Last is your Hedgeye.
Ooh, let's go over here. This is the, let's call this short-term trade.
Yes.
Shorter-term trade.
Which is like almost, a lot of the time 3 trading days.
Ooh, okay. Let's go. What color would this is going to get gnarly. What color would a rooster have its head? Like if you put a little rooster there.
It's a good drawing.
This is easily the thing I'm worse at, right? Like, worse at. It's drawing. So so that's the rooster. So rooster, and a rooster's duration is 1 to 3 days.
Yeah. It's.
Oh, look at how I did that. Now my drawings aren't very good, but look at how I got it to line up here. This is good. So this is less than that, right?
Right. And so the whole point of our entire process is to increase probabilities over every duration. So when every duration is lining up, so if it's bullish trend, low end of the risk range, and let's say it's bullish on your Hedgeye, that's a probabilistic bet I want to take.